Wise just became the largest position in my portfolio. I started buying shares this year itself. I bought the shares so cheap that today I'm already profitable by about 40%. But still, Wise is undervalued according to me. Of course, not as undervalued as a few months ago. Nevertheless, there are a few things I believe that the market, people in general, they don't really understand about Wise, and I want to address these things today. First, we need to understand what happened to Wise recently, why the stock is up so much. First of all, a few weeks ago, they had a partnership with Standard Chartered, one of the largest banks in Asia. And last week, they announced a partnership with Morgan Stanley, one of the largest banks in the world. And this is one of the misconceptions about Wise, that they are here to compete with the banks, but they are partnering with banks. In a way, they are helping the banks. The banks, of course, are helping them. You have to understand that when you're transferring money from your bank to another country in another bank, the reason why it takes so long, why it is so expensive, it's not really because the banks want to make as much money as possible. Yes, it is true that they are here to make money. I'm not defending them, but there's a reason why it takes so long. There are so many regulations. Some have been put by governments and others by the banks themselves in order to ensure that the money is being transferred. It is real money. It is not a false thing. That's why they have the SWIFT system and everything they build. So the banks, they try to regulate themselves. And of course, there are government regulators regulating the bank. It's complicated. It is a complicated mess. That's why when people say, okay, Ripple, Bitcoin are going to replace everything, but it's not that regulated. So it's possible that your money is lost forever. And Wise, by partnering with the banks, it is helping the bank making international transfers faster, and it is also helping Wise in terms of recognition. Other banks are going to embark their clients on the Wise platform. It is just like Visa started by Bank of America a few decades ago, but now Visa is an independent company that every bank is using. Visa is not really competing with the banks, but instead of every bank developing their own credit card system, credit card network like Visa or MasterCard, each one started using the one built by Bank of America, which eventually became a company of its own. Here, Wise has always been a company of its own. The main competitors of Wise would be Western Union, MoneyGram, those companies, even PayPal. And this is the second misconception about Wise, is that they are only a business for remittance. That is, if let's say you go and work in another country and you want to send money home for your family, you use Wise. Just like in the US, Remitly is very popular. This is how really Wise started. The primary customers of Wise initially were these people, but now it has expanded beyond that, because when I'm using Wise, I'm not really someone in another country. I'm using Wise just to send money to people for payment and services. We have to understand that Wise has three businesses today, and I will talk about the third misconception in a few minutes. The first business is, of course, international money transfer. You want to send money internationally. Wise is one of the cheapest and fastest ways to do it. Instead of you using the bank, which you have to wait 3-4 business days, sometimes even more, it's complicated and there are so many fees. Wise, they give you the fees, how much you're paying, and you just send the money. Of course, for Wise to make money like this, they need to have many clients on the Wise platform, because they try to lower the fees so much that they are going to make money only by large volume. And this is happening. It is a company growing at a rapid rate. They have millions of customers and growing each year, each quarter. Now coming to the second business of Wise, why many people are staying on the Wise platform, not just for money transfers, is because they have this international bank account. Wise is not a bank, but they have a card business. So you can use your international bank account. You're traveling to another country. You have USD on your bank account and you travel to America. You can use USD instead of using your local currency in your normal debit card, which you're going to be charged a lot for currency conversion. This is one big advantage of Wise. And the second business. The third one is, of course, the international bank account itself. And when you think about a bank account, you think of depositing money, which many people are now doing on Wise. And if you deposit money, you expect to receive some interest on that deposit. But Wise is not a bank. They don't have a banking license. There are some people who compare Wise with Revolut, and recently Revolut got a banking license in the UK. This is not the path that Wise wants to take, because if you have a banking license, you have banking regulators after you. Wise is regulated as a fintech company, not really as a bank, and banks are heavily regulated. I don't see having a banking license as an advantage right now for Wise, because if you have a banking license, you also need to have capital, and you need to take deposits, you need to give loans in order for you to maintain a certain capital. It is a complication which is not really something that Wise should be doing right now. Because Wise is not a bank, there are some limitations to how much they can pay in interest in many countries. In some countries, they cannot pay in interest at all, and they give other rewards to customers. And this is one of the reasons why the market was recently disappointed with Wise, because interest rates in the UK has been going down, and all over the world interest rates have been going down. They expect that the profits that Wise was making from interest is not going to be here anymore. And it is true that the profits is going to be lower, but Wise is very honest about this. If you look at any report of Wise, they tell you that they expect to keep only 20% of the interest income. 80% is being used either for fees and maintenance, and the rest is going to the customer. So let's say interest rates today are at 5%. Wise is keeping only 20% of that, that is 1%. And 1 percentage point is going to be used for maintenance, and they can pay 3 percentage points, 3% to the customers as interest, keeping USD, euros, and everything else. This is just a simple example. Of course, if interest rates are higher, Wise is going to make more money, but Wise never hit this. They always say that they don't want to get dependent on the extra income they are making today. And in September, the board approved a share repurchase program. I don't know if Wise has been repurchasing shares recently, but this is something that probably they are going to do with the extra cash, extra income they are making. But this is not the income that they want us to focus on. Wise is a very owner-friendly company. Actually, the CEO of the company, when I tweeted about that instead of calling their investor relations, they call it owners relation. The CEO tweeted about that. So they want to show themselves as a friendly company to shareholders, and they are not lying to shareholders, putting these big numbers which are not going to be here if in the future they can pay more in interest or interest rates go down. So they want us to focus on underlying profit. This is what they call it. And if you look at the recent first half of 2024, they had 292 million pounds in profits, but the underlying profits were only around 160 million pounds. So they acknowledge that the money they are making right now is too much. It's not going to be that much over the long term. And you, as the investor, if you're trying to value Wise, you evaluate on how much they are making. Of course, you consider that they have this extra cash that they're making today, which probably won't be here in 10 years, but which they can use to buy back shares if they want to. And probably they are already doing it. And I hope so they are doing it, because the shares are cheap today. And if we just do a simple calculation, let's say 147 million pounds, I said 160, I believe, which was wrong. So that's half a year, over 1 year, 300 million pounds. And how much are you willing to pay for that? Especially Wise is growing at such a rapid rate today. Let's say you're willing to pay 20 times earnings on that. The intrinsic value of Wise should be around 6 billion pounds. Just for the main business they want you to focus on. But we cannot ignore the extra cash. It's here. They can use it. And when I was buying shares of Wise, it was around this price, 6-7 billion pounds. Today, I will say, based on the rapid growth of the stock, we can pay more than 20 times earning for this stock. And the PE ratio, I believe, is 25 right now. I'm not going to give you a price how much I believe the intrinsic value of Wise is, but it is still undervalued according to me. Of course, not as undervalued as before. I'm not buying Wise right now. There are better investments in my opinion. For example, Crocs. I would recommend you watch this video next. Have a nice day and goodbye.